Hello, everyone. I'm Chris Kapches, CEO of Chestnut Park Real Estate, and today I'm going to provide you with the February market report for Toronto and the GTA generally. It's an interesting report today because normally reports are driven by data and what's going on in that data, but there's more to the resale market in February than just the data. And unfortunately, it's something that sort of transcends the data. And I'm speaking specifically about the kind of geopolitical situation that has been created by the Trump administration and its threat of tariffs on Canada. It's threatening tariffs with other countries as well, but particularly as it relates to Canada. And we've also seen the Trump administration both implement tariffs and then withdraw them, threatening to implement them and then not implementing them. This has created a very unsettling, uncertain, and to some extent fearful atmosphere in Canada and particularly in southern Ontario. There's concerns about where the economy is going to go, unemployment, GDP, all of those things that play a huge role psychologically in the minds of buyers and sellers. So what we have seen is they have been essentially immobilized, particularly buyers during this marketplace. And again, it's for the reasons that I just mentioned: this uncertainty, this fear about the economy, and ultimately what it means for individuals. So, what typically drives resale markets? Local needs, local necessity. Are not at play to the same degree in February. So if we look at the data for February, we see that sales were down. Inventory levels have come up in February. The one strong point is that the average sale price has stayed strong. And one needs to look into that average sale price, and I'll get to that in a moment, but it has stayed relatively strong. But on the sales side, we're down 27% compared to last year. Only 4,037 properties were reported sold. Normally in February, we actually start seeing the market picking up, but it didn't for all the reasons that I mentioned. In fact, if you look at February's results, you have to go back to 1996 in order to see results that are less robust than what we saw in the month of February. As I mentioned, inventory levels are up. We finished the month with almost 20,000 active listings, 78% higher than what we had last year. To some extent, that number needs to be qualified because a lot of those listings are relists, properties that were on the market that didn't sell, primarily because probably the price point was a little too high for buyers, but they're in that market as well. But the average sale price, as I mentioned, has stayed strong, came in at $1,084,000 in the month of February, only slightly off from February of last year, about 2%. But it's actually stronger than that number appears, primarily because over 30% of all the properties that were sold are condominium apartments. They're the least expensive housing type in the market, and they have dragged the overall average sale price down. Detached properties, particularly in the city of Toronto, semi-detached properties and townhouses have all sold very well, with prices on average probably close to $1.5 million. It's the condominium apartments with average sale prices around $700,000 that is pulling that number down. So in some ways, the market is much stronger than February's overall data would indicate, but it still is weak by historic standards. And again, for the reasons that I mentioned a few moments ago, that uncertainty, the fear, and the economic impact that these tariffs and the retaliatory measures might have. However, as we look ahead, there appears to be some stabilization in the marketplace. Some early March data indicates that buyers are somehow coming to grips with all of this uncertainty that I've been speaking about. Early numbers seem to indicate that average sale prices are popping a little bit as well. So as we conclude this market report, I'm actually very positive about where this market is going because I think some of the uncertainty is beginning to dissipate. And when that does happen, the huge demand that is out there, that is nowhere in the statistics that we've talked about, is going to start coming back into play. And we're going to see sales pick up, and I think fairly dramatically. And in addition to that, it must be remembered that on March the 12th, the Bank of Canada is going to be meeting. And we already anticipated, because of a recent weak job report, that the Bank of Canada would be reducing its bank rate. But in addition to that, the Bank of Canada is probably concerned about what's happening with the Trump administration and the issues that it's causing economically. And the likelihood is that it will reduce rates even more so. And if it does, we will start seeing mortgage financing rates, particularly 5-year fixed term, coming down below 4% as we get to the tail end of March. And that, in conjunction with everything else that I've spoken about, should be the stimulus that the market needs to really start picking up as we move through March and then into the rest of the spring market. So until I provide you with the March market report, please stay healthy, please stay safe, and I look forward to providing it to you. Thank you very much.